In the meantime, what we should do is perhaps take stock of a lot of the banking updates that we've been getting over the last couple of days. And the updates have been fairly mixed. Some banks are talking about double-digit growth. Others have been struggling in single digits. So let's discuss all of this with the Digant Haria, founder at GreenEdge Wealth Services. Digant, thank you so much for joining in. Just wanted to start with the Union Bank because that's what we saw after market hours yesterday, where the advances growth is, I think, 6.8%. The deposit growth is, just about 3.5% thereabouts. So it's really, it stands out in terms of weakness. And there were some other names as well. I think PNB on the PSU side, where the growth numbers were, at least advances, were in single digits. How do you look at PSU banks right now from a growth standpoint and a valuation standpoint?
Yeah, morning, Surabhi. See, this entire growth slowdown started probably around elections of last year. So if you look at the credit growth data of India as a whole, it's around 9% for, like the YOY credit growth in that June quarter was around 9%. So see, when the growth is 9%, we know that maybe the private sector will grow at 11, 12 and the public sector will grow at 7, 8% because the system growth itself is 9. So I don't see this, PNB or, Bank of Baroda or anyone's performance as very, very ghastly or anything because, see, system growth minus 2% is what generally the public sector bank is used to growing. But yes, I think the system growth at 9% itself is a very, very weak number for a country like India. Like we should at least be at 12%. And now we see that, the whole macros, the RBI has, taken a lot of initiatives to ensure that this growth starts. I think that, 1 quarter later, like once the monsoons are over, the slow season is over, we should see this number improving. These are not great numbers, not something which instills confidence, but I think improvement is coming on its way, Surabhi.
Digant, hi, good morning. Always great to get a perspective. And, what we like about speaking to you, Digant, is you pull back a little bit and then you sort of zoom in as well. So that's very useful. And NBFCs has been, a happy hunting ground for at least a few people. I was just, for example, looking at IIFL, right? I mean, underwent so much damage. The first time it started falling was that gold ban. It never really recovered, even though the ban went away. Went down to all the way to about 300 kind of levels, back to about 500 after many months. Is this a broader kind of a rising tide lifting all boats kind of situation, or it's more idiosyncratic, in your opinion?
I think, morning, Prashant. I think it's a little bit idiosyncratic because, when we say NBFCs, there are a lot of pockets. I think the brightest pocket is gold loans for the next 12 months. So just Surabhi was just hinting that, 6, 7, 8% growth, and we were talking about credit growth of 9%. Really, really boring numbers. But I think gold loan as an industry, Prashant, this year can easily do 20% growth. And then good players can, easily do 30, 40% growth. IIFL, after a long ban, has come back. So I think growth will come back in IIFL. I think the stock price is yet to react, like the Muthuts and Mannapurams and Fed Finas of the world, they have reacted to a good gold price, a good RBI policy, and a good gold demand environment. IIFL hasn't. I think it should over a period of time because, once RBI ban is lifted, getting the liabilities or getting borrowings takes time. And I think IIFL is sorting those issues out.
And in NBFCs, actually two questions. In NBFCs, what are your top 1 or 2 ideas? You like IIFL clear, I think so. But what are your top sort of rated ideas? And broadly, if the RBI is trying to jumpstart this credit cycle, in a way, the NBFCs are clearly higher risk in that sense as compared to banks and the top tier banks, which are much more stable. But this is where perhaps you make a little bit more in terms of alpha. What's your sense?
Yeah, absolutely. I think, if one has to bet on financials, Prashant, I think, PSU Banks is something which gives 10 to 15% returns because the cycle will pick up, over the coming months. But I think NBFCs is something where, people can look for alpha. So just like we said that, gold loans as a space is probably the fastest growing and the best placed space. So, anything in gold loans should, generate decent alpha for the investors. Similarly, there is one sector sector which is an avoid, which is a commercial vehicle finance, okay, or the CV finance. I think that we have finished 3-year cycle, so we will see that as going very, very slow. But the space which I like, apart from this gold loan space, is something which is in that personal loan, microfinance, this entire high yield lending space. That's because this space has gone through a lot of pain. I think now the asset quality cycle is coming to an end. The regulatory cycle is improving, and the demand environment will improve in the coming months. So I think this entire banks and NBFCs which are linked to high yield lending, something like say an AU Bank or an RBL, on the banking side, those will see the biggest alpha in terms of earnings. And when we talk of NBFCs, companies like say a Northern Arc or a Fed Fina, or even say an Ujjivan Equitas, something like that.
We've seen an up move in Northern Arc earlier. We had the management join us last week. They said that 22 to 25% growth is what they're expecting. So, Digant, what your point is that loan growth at some point will pick up, but yields will pick up a lot faster because loan growth which picks up will pick up on the high yielding sides as well. The concern that one had was a lot of the people who are getting fresh loans are the ones who are already leveraged. At what point does this net widen and you go to underserved places, and what companies benefit the most from that?
Yeah, so I think, see, this whole, Mangalam, this whole space below 50-60,000 of ticket size, that is a space which is really over leveraged, and that problem is still not over. We are still in that problem because the incomes of those customers are not going up. But I think, the space between that, 1 lakh to 5 lakh kind of a personal loan ticket size, that space should really do well. Because some amount of deleveraging has happened there, and this entire tax cut by the government and this rate cut, this benefits this space. So I think Northern Arc is is very well placed to ride this boom. Then even something like a Federal Bank Financial Services, it's an NBFC of the Federal Bank Group. I think they are into this high yield lending, so they are into gold plus small lap plus some bit of business loans, so they can also benefit out of that. Something like an SBFC. There are a lot of small names. Mangalam, it's a buffet out there.
So smaller names is what you're betting on. Where do you stand in the PSU versus private banks debate right now?
Mangalam, I think, the entire large cap space, be it the top 4 PSU banks, the top 4 private banks, and the top 4 NBFCs like, Bajaj, Chola, Shriram's, I think all of them will give you market returns, maybe 10 to 15%. There is no real big case of saying that this is better than that. I think everyone will suffer this slow credit growth in India. It is only the smaller guys who can really outperform in the next 1 year. At least that is our view.
Okay.
So no great picks in, all the large caps. Maybe you can just invest in a large cap banking ETF or something. You'll get your market returns out of it.
Yeah, so the alpha is in the tier 2, tier 3 names, and that's why the perspective that you gave really helps. Guys which are very granular with respect to MFI, high-yielding consumer businesses, gold financiers, got that. So really helpful takeaways. To wrap it up, Digant, the market also loves to play some turnaround stories. And everybody wants to make a huge killing by buying out stocks that are in distress. And here we're talking obviously about IndusInd Bank. And everybody thinks that you buy the bottom and then you would have a great story to tell a couple of months down the line. But I don't know how that could play out, because there's a lot that's still that we don't know. The forensic audit is not done. And if you look at the numbers that the bank has been posting, I mean, all of this is taking a toll on the business. Advances, deposits, everything's been falling. Your thoughts, and what would your word of advice be to investors who've been looking at this name?
See, I think, Surabhi, there is no pot of gold in IndusInd Bank, to be honest, because right now we have just identified a few areas of problems. Now, fixing it itself, it will first require a new MD to come. Then the whole new team will come. They'll start to work. So I think it's a long journey. And see, the stock has, been quite firm in the face of all this bad news. So I just feel that, this is like a trading range kind of a stock where, 750 to 1,000 or, 700 to 1,000 is where the stock trades at, depending upon what kind of news. But business is really, really affected, and it takes 4 quarters for it to revive, even if there is a good cycle. So I think you're better off hunting somewhere else. I think IndusInd is for the traders, who like to trade volatility. I think for people who want to buy and hold for a cycle, say 1 year, 18 months, I think there are better, smaller bets, to take than IndusInd Bank.
And you've given us some names. I'm just recapping: AU Small Finance Bank, RBL, IIFL, Federal. Some of the companies that Digant likes. All right, Digant, thank you very much. Great conversation. And we look forward to the next one as well.